The list of regions hitting double-digit home value declines is growing, with Wellington the biggest loser in the latest valuation figures, down 17%.
And while that might encourage first home buyers, rents could go up if investors start selling up. Zane Small explains.
First call, second, third final time, looking for 5 million.
Big ticket property sellers not fetching their desired bids today, even the more modest ones.
Somewhere around the 800 to start.
Barfoot and Thompson auctioneer Marion Tollich pointing blame at strict lending rules.
What we're hearing a lot more at the moment is, we can't bid because the banks want us to jump through a few more hoops.
The latest QV House Price Index shows several regions hitting double-digit home value declines this calendar year. Wellington hit the hardest with a 17.6% drop, followed by 13.7% in Palmerston North, 11.7% in Auckland and 11.6% in Napier.
So what we're seeing in the housing market at the moment is very low volumes. So the number of purchases across all buyer groups is down.
Except for first home buyers who've actually increased their market share from 23% in the first half of this year to around 24% in the third quarter. But with typical mortgage rates expected to reach 7% or more in the coming months, CoreLogic says it'll test first home buyers, especially since the fortnightly cost of rent is looking comparatively cheap to servicing a mortgage.
Does tilt the balance a little bit more in favour of renting.
However, mortgage advisor Jamie Sanderson says that may not last if rental property owners also start to pull out.
I think we'll start to see the rental market get more competitive, especially if investors do decide to sell over the next couple of months, based on if they're waiting to see what happens with tax changes, healthy home standards, increasing interest rates.
So no one really coming out on top in these topsy-turvy times. Zane Small, a News Hub.